Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock related queries. In a short while from now, we will connect with our experts where you get a chance to connect live with us on a WhatsApp number that will be flashing on the top of your screen. But before that, let's have a look at what the markets are up to. So Cheryl, the markets continue to be volatile. They're just flip-flopping between the red and the green territory, but a mild recovery from the day's lowest point.
Absolutely, Shrishti. If you look at the way how the markets are, look like they are actually juggling between the positive and the losing end. Right now, we've recovered smartly from the day's lowest point, but nevertheless, we are yet to break into the positive territory as of now. We are trading flat with a negative bias. You have Nifty Bank that has recovered from the day's lowest point in the positive territory as of now, but moving in tandem with the benchmark indices. Let's take a look at what the advanced decline ratio is doing. And if you look at the advanced decline ratio, they are actually neck to neck in today's trading session. It is now a tad bit in the favor of the declines. That's the way how the advanced decline ratio is panning out when it comes to the NSE advanced decline, while BSE advanced decline ratio, if you look at it, is still a tad bit tilted towards the gainers. Talking about the sectoral or rather the gainers and the losers on the Nifty at this point in time, you have the IT counters that are doing well, in particular HCL Tech, that's the top gainer on the Nifty, followed by SBI Life, Cipla, as well as Adani Enterprises and HDFC Life. If you look at the life insurance companies, they are reacting to the data also that has come out, and slew of brokerage notes also on those particular counters. While on the flip side, it is BPCL under pressure, 2.5% downtick coming in for that one. You have ONGC, NTPC, Aisha Motors, as well as Coal India that's declining in trade. Once again, you have a brokerage house that's come out with its take on the OMCs, where they've actually gone ahead and downgraded that particular pack. Talking about the sectoral indices, then is the PSE sector that is actually the top sectoral loser with realty, PSU banks, metals all declining, while IT is the only one that is actually holding on to some sort of a green on the screen as of now. So that's the way how the markets are panning out at this point in time, Shrishi. Like you mentioned, it is pretty volatile. It is actually a rather range-bound trading session is what we are witnessing.
All right, a range-bound trading session. Let's hope and let's wait that if we happen to break any side of the range or not. But with this, viewers, let's move on and let's start taking all your stock-related queries onto the show then. And today we have two of our very special experts, Kunal Bothra on the technical front as well as on the fundamental side. We're being joined by Rajesh Agrawal, Head of Research at AUM Capital. And also, viewers, you can connect with us live on a WhatsApp number that will be flashing on the top of your screen. So you can start writing to us, and people have already started writing to us. And the first query that I have is coming from Ghosh Dada. Rajesh, if you could help him with your take on Cafe Coffee Day. He's still holding 10,000 shares. He actually didn't share his buy price in this one, but any hopes that this stock could give him some returns?
Good morning, Srishti. Good morning, Cheryl. Good morning, Kunal. It's very difficult to say whether Cafe Coffee Day will give some return or not, because fundamentally it's in a very bad shape. The numbers have been very bad, and we all know the kind of history it has about its promoters and all those things. It's better to get out of these kind of stocks in such a vibrant market where every day there is a rally and you get an opportunity to get out of junk stocks. They might go up because of market conditions or whatever other reasons, but fundamentally they are in a bad shape. That's a fact. And I would just suggest to get out on any rise.
Good morning to you, Rajesh. Good morning to you as well, Kunal. And just a quick note for all of our viewers. As you can see it on the side of the screen, you have the Vibrant Gujarat Global Summit, where you have who's who of India Inc. Not only India Inc. as well as global leaders who are slated to speak at that particular event. So we will be cutting into the Prime Minister also, who will be speaking in a short while from now. But let me take this query coming in from Mali, who is writing to us from Hyderabad. And Sonata Software, 800 shares at a price of 727 rupees per share. Kunal, he wants to know, should he look at selling Sonata and instead look at buying ICICI Bank? If I remember quite clearly, this morning you had a sell call coming on ICICI Bank. But in this strategy, do you think it makes sense to sell Sonata and look at ICICI Bank or another stock altogether?
No, I think you should hold on to Sonata Software. I think it's a performing name, stock which has done reasonably well. And we are at a point where many of the IT names are getting into the potential range of a turnaround. So maybe if this kind of a phase plays out, say for the mid cap IT names as well as the large cap IT stocks over the next in a couple of quarters, we may be looking at many of these stocks doing exceptionally well for themselves over the medium to long term. So I would suggest a hold on Sonata Software as of now.
All right, then moving on, and the next query that I have is coming on Manappuram Finance. And Rajesh, this stock is in the news as well as trading down by around 5 to 6%. And Neelam is saying that she is making decent profits, around 35 to 40% in Manappuram Finance. So at this point in time, would you advise to book out profits? She can still hold for the short to medium term. So what's your take on this one?
See, the stock has run up quite a lot. Too, there are news of uh, today. So it's better to book out your profit at this point of time since you are on a profit and switch to some other NBFC name which are on a comfortable positions like a Poonawalla Finance or a Geo Finance, which can give you better returns than one of what Manappuram can give in medium term.
Okay, this one is coming in from Satya and he's holding BPCL at 355 rupees per share, Kunal, and IOC at the price of 73 rupees per share. Does it make sense for him to stay put with these counters, or should he look to exit given the fact that they have actually risen quite a bit already?
Well, I think looking at the current scenario where many of the PSU stocks have done reasonably well, they seem to have a good outlook over the next couple of quarters as well as over the next couple of years. I would probably be of the belief that even the OMCs from current levels could stand to gain. And the fact is that you've bought at lower levels, you're sitting on good buffer of profits for these stocks, and I think that's where you could probably try and take advantage of holding on to these stocks further, because if these stocks get into the second leg of breakout, we may probably be looking at least another 15 to 20% gain for many of these stocks on an average over the medium term. So I would suggest a hold.
All right. Coming back to you, Kunal, this query is coming from Shiva. And amongst the Adani group of shares, any two stocks that you like at this point in time? Shiva wants to know any of your two top picks from this particular group and any levels to enter as well.
So particularly from the Adani group of stocks, I would probably be looking out for Adani Green at current levels. That's a stock which I think purely on the basis of charts is showing signs of a formation of a bullish flag as well as a breakout for itself. Adani Ports is something which you've been recommending regularly, I think over the last few months, especially when the stock was almost stuck at that 880, 920 odd mark, towards the point where the stock has given a breakout above 1100 levels recently. So I would suggest a buy on Adani Ports, but I think 1100, 1120 could be a slight better price rather than the current market price. But I'm unsure whether the stock would actually go into a correction to those levels. So you may consider buying smaller quantity and wait out for dips. Adani Green is something which you can trade at current market price.
All right. This next query that I have actually once again for you, Kunal, because Neha wants a short-term view for a period of 6 months or so, and she wants to know whether was the entry price as well as target that she can keep for IHCL, that's Indian Hotels, Praveg, as well as for Indus Towers for a period of 6 months, and any of these counters have the potential to give 30% upside in this very short term.
Yeah, Indus Star and Indian Hotels, these are the two names which I do track closely, and I think you could probably consider holding on to these stocks even from current levels. I'm unsure that whether you'll get an immediate 20%, 30% up move into these stocks, because the way these stocks run up have already run up on the base of the event which we all are waiting out for. But I think for Indian Hotels specifically, the zone of this 450 odd mark is acting as a pivot support for the stock. Maybe there could be a slight correction which could be at play. The stock may come back sub that 450 levels, but then eventually once the correction and the time-wise consolidation gets over, you could be looking at a potential 500, 540 as a target for Indian Hotels. Indus Star is something which I think has managed to break out the 200 levels. The chart patterns are very attractive on the medium-term time scale. The beta is high for the stock, which means you can expect a sharper degree of volatility for Indus Star, but I would believe that the stock also looks good for another 20% on the upside.
All right, moving on. And Rajesh, the next query is coming from PKG Raju. He's a senior citizen and holding two banking names. Firstly, he's holding Union Bank from a price of 102 rupees. He's having 5,000 shares of this one. And Bank of India, 3,000 in quantity from a price of 98 rupees. Sitting at decent profits in both of these stocks, would you advise to book out profits, or with the improved fundamentals, you believe that the rally could stretch more? And he wishes to stay invested for the medium term.
One can continue with both of stock. Both Bank of India, Union Bank, both are looking very good. In fact, entire PSU bank space is looking good because of the fact of their balance sheet cleaning, lower NPAs, and PS. Most of the banks are reported NPAs below 2%. That's a positive point. I think going forward, more upside is left from in these stocks, maybe another 15-20% in the next 6 months or so. So I would suggest continue with both of them.
Another one coming for you, and a very short and sweet one coming in from Anjali from Nasik. She wants to know about UPL. She's suffering a loss on it. What to do?
For me?
Yes, for you, Rajesh. So basically, I believe she wants to understand, does it even merit to stay put in UPL now that she's making loss? Fundamentally, does it make sense to stay put with this one? Because given the fact that the news flows seldom tend to actually support UPL, isn't it?
Yes, I agree. There was some news from the Japanese civil saying that the chemical was going in a bad shape and all these things. But we should not forget that's one of the leading companies in agrochemicals. And going forward with the elections around the corner, I think there would be some jobs for rural economy also. And all that negative has been discounted in the price, I would say, considering the fact that Nifty is standing at 22 odd thousand. Nearby 22 odd thousand, the UPL is trading at a much below its 52-week high. They have a wide range of products. The business is not only confined to domestic market but international markets also. It's high time. I think this stock would perform. If somebody has a time horizon of 12 to 18 months, I would say stay put on this.
Stay put in UPL for the long term. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries.
You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of a stock-related query. And the next one is coming in from a viewer, Ramamurthy, who's writing to us from Bahrain. And he wants to know whether he should book profits at 20% for Infosys, Kunal, and also should he book partial profits in DLF and Oberoi Realty, where he's making 35% profits.
Well, Infosys, I think you should stay put. Oberoi Realty and DLF, you may consider booking out part profits, just on the basis of the stocks being slight overbought on the short-term charts. So you may expect some bit of mild correction into these names, or at least a time-wise consolidation, if not a major price correction for these stocks. Long-term charts for the real estate stocks still look very, very attractive, and I would believe that these stocks could probably be going through a major cycle over the next couple of years, if not more. So it depends on what your positioning is in terms of time frame. If you're looking to encash on your profits and then assuming to buy back on mild phases of correction, then I think you can consider that for the real estate names.
All right, Rajesh, the next query is coming from Sumantra Chatterjee. This one is on two counters, L&T Finance as well as IRB Infra. Are these good levels to enter into both of these stocks for a long term?
At least L&T Finance is a good level to go for long term. The fundamentals are good. They have restructured their business. I think it has not performed quite for a quite long period of time, and a 180, 185 target in the next 12 months is quite possible. As far as IRB Infra is concerned, infrastructure story is going to be there for the next 1 to 2 years. But there are better choices in this space. I think Larsen would be a best choice in this space. Otherwise, one can go for JK Infra.
Rajesh, this next one is for you from Mayank, who's writing to us from Raipur, and he's given a question to you, and he's also said that he's a fan of your idea and thought process as well. He wants your view on Credo Brands marketing, Mufti that is, which is recently listed on the board. So he's planning to buy and hold the share for the long term. And one of the reasons being is that he's a consumer of the brand for a long term, and as per his understanding, the fundamentals are also very strong and the brand is also very strong. So he wants to know whether it's a good long-term bet considering that the stock's market cap is around 1800 crore rupees.
Thank you, Mike, for your kind words. And as far as Credo marketing is concerned, yes, you said it right. The brand is very strong, and I myself use their brands mostly. But when I think of valuation, when we see the valuation seems to be on a higher side, although it has not performed quite well after the listing as was expected. But still, I think the valuation are on a higher side. If you get by any chance you get the stock around 220, 225 odd level, that would be a very safe levels to enter into the stock. Keep a watch on those levels and uh, try to enter on, at those levels. As you said it right, the fundamentals are in strong footing. Considering the brand, the market cap is also reasonable, I would say. Consider levels before entering.
All right. The next query is from Sonia Kunal, and this one is on two counters, and she wants a short-term view on ABFRL, where she is holding 700 shares from a price of 243 rupees, and she also has IEX 1000 in quantity from a price of 170 rupees. What will be the short-term view on these?
See, I think we should hold on to both of these names. ABFRL is going through a potential as well as a possible turnaround. Yes, the stock has met with a lot of resistances on the way up, but then I think I would believe that sooner or later the stock would chart out a course of a very strong, steady as well as a gradual uptrend for itself. Even the case with IEX, that is I think one of the only PSUs, if I'm not wrong, which is still trading at significantly lower levels as compared to most of the PSU basket. So it's very rare to find such kind of high risk reward play for stocks like IEX over the medium to long term. And I think good prices, good news, they don't come by into the stocks. So, yes, IEX has gone through a lot of negative news flow, but I believe eventually the stock would get into a turnaround mode. So I think it's a good price where you can look to hold on to IEX if you're a medium to long term investor.
All right, this next one is coming in from Dr. Ravi from Bangalore. And Kunal, for you, he's planning to buy GMDC today. He wants a one-year view on this particular counter.
Well, I think from a one-year perspective, it could be a bit of a steep risk reward to buy the stock at current levels. I was actually looking at the indicators for the stock and the positioning of RSI. For example, the weekly, monthly RSIs are now about 90 plus for GMDC. So I think even though after this fantastic uptrend the stock has seen, I remember I think from 150, 180 levels to 500 plus where the stock has hit recently, I would probably believe that it's a fairly skewed risk reward not to initiate a buy at current levels, but in case if it gets into that odd phase of correction, say comes closer to 420, 425, that could be a good buying territory for GMDC.
Right. The next query, Rajesh, is coming from Ketan from Rajkot, and guess he's writing to us for the first time, where he wants a view on JSW Infra. He has bought these shares 5,000 in quantity at a price of 216 rupees. What's the outlook on this particular counter, and should he stay invested?
We are very bullish on this stock. Since its listing, it has not done very well, but the prospects are very good. They're into ports and all. They're expanding like anything and considering the kind of infrastructure stories going forward. I think these stocks can easily cross 300 plus in the next 1 year. Any dips in this stock should be considered as an opportunity to buy. For existing investor, one can continue to hold.
Okay, this one is for you, Kunal from Namita, and she's holding 3 counters, and all 3 of them she's suffering losses in. One is Indoco Remedies at a price of 426. The next is Jubilant Pharmova, 589, and Crompton Greaves at 402. She wants your view on technicals. What should she do with these counters now?
Indoco Remedies, Jubilant Pharmova and
Crompton Greaves.
Crompton Greaves. So I think out of the two so far, the charts for Crompton as well as Jubilant Pharmova, they look fairly attractive. I think these stocks have finally managed to break below their break the pattern of lower highs and lower lows on the weekly charts. Even though these stocks may be going through their own fair share of struggles, but remember when stocks manage to break of that downward sloping pattern for themselves or a downtrend, these stocks, even though may take some bit of time to try and get into that second leg of strong momentum, but then eventually these stocks get there. So I would believe that both of these stocks are worth holding, Crompton as well as Jubilant Pharmova.
Right. Rajesh, the next query is on two pharma names. Katir is looking to invest rupees 1 lakhs in either of these two names, that is Natco as well as Zydal Wellness, for a long-term investment. Do you like any of these names?
Both are good companies, I would say. While Natco is into oncology and all Zydus is into wellness lives. And both are doing very well on valuation parameters. Both are exciting. The only problem with Zydus is the low liquidity. The liquidity in this counter is very low. So if you are having some kind of investment come trading kind of thinking, then you can go for Natco. Or else I would suggest put 50-50% in both these stocks.
Uh, Another one for you, Rajesh, from Padma Siva from Bangalore. He wants a few of infra companies working in Mumbai that he can actually look to invest in, given the fact that infrastructure in Mumbai is on a high. We have new buildings coming up everywhere. You have new roads. You have now that Mumbai Trans Harbour Link also all set to be launched on Jan 12th. So any Mumbai specific or Mumbai based infra companies that you like?
See, one can this is one. This is the one can go for this stock with this price.
There's an audio issue with your link, Rajesh. If you could repeat what you actually said, it wasn't audible. There is an issue with that particular link. We will actually reconnect with you, Rajesh, and after the break, maybe we'll get your view on the Mumbai-based infra companies. But for now, we slip into a break, and when we come back, we will get views from Rajesh and answer some more queries. And when we were actually just slipping into the break, we asked Rajesh Agarwal a very pertinent question, is the fact that out of the plethora of infra companies that are actually based out of Mumbai, which one is that he likes the most fundamentally and that one can look to invest in? What's your take, Rajesh?
See, Cheryl, there's an infrastructure boom in the country, no doubt to say, and Mumbai being one of them. There are a lot of names which comes to our mind. But as I said earlier, Larsen would be the first choice, no doubt on that. But if you are looking at a mid cap or a small cap space, I think there are a few names like Kalpataru or a NCC, even Auliwalia. These are some of the names which we like at this point of time. Specifically for Mumbai kind of projects, even GSW Infra would be a better choice.
Okay, so those are the top real estate bets coming in from Rajesh. But moving on then, and Kunal Balan wants to have a short-term view on two counters. Firstly is Indiabulls Real Estate as well as Shriram Properties. How do they look on the charts?
So Shriram Properties, I'm not sure whether the stock is at 130-35 levels, if that's the stock which you're asking. But if that's the stock, Shriram Properties, then I think it looks attractive at current levels. The stock seems to be coming out of a mild consolidation. Indiabulls Real Estate, in fact, is a stock which had been a huge underperformer with respect to most of the real estate peers as such. So I would probably expect that whenever the stock gets into that zone of outperformance or a breakout, it could cover up the huge underperformance with respect to most of the other peers. Time and again, we've seen volume participation increase for Indiabulls Real Estate whenever the stock moves up higher. So, it's just probably could be a matter of time that the stock breaks out and, gives those strong price performance days. So bullish on Indiabulls Real Estate, but it's the only concern is with the high beta stock that the stock is so far underperforming.
All right, coming to you, Kunal, once again, IRB Infra, Dr. Uday Singh, who is a senior citizen from Hyderabad, wants to know whether it's worth investing right now for the short term.
Well, for the short term, you may look to buy the stock, but I think the bigger chunk of volume seems to have already happened the stock in the last few months. The stock is almost at 46. The breakout, if I'm not wrong, for IRB Infra was closer to, I think, 25 or 27 mark on the long-term charts. And I think this is almost like a 2015, 2010 levels of resistance for IRB Infra. So a bit overstretched in terms of the price levels. You may consider buying, but then keep your quantity or position size a bit lower.
All right, the next query that I have, Rajesh, is on Engineers India, and Chaitanya has been holding these shares from a price of 172 rupees, and the total corpus that he has invested in this stock is rupees 3 crores. At this point in time, should he continue to hold on or move out and book profits rather?
See, I don't think moving out would be a great idea, but since you have invested 3 crores, what I would suggest is go partial profit. By partial, I mean around 20% of your holding book at this point of time. One, the company is very strong on fundamentals, gives out good dividends, debt-free company, caters to oil and gas and other sectors. And this is one of the kind of company which is into engineering and catering to more infrastructure related companies like oil and gas sector, aerospace, and all those things. This is a very fantastic company. Book some profit at this point of time. By any chance it falls to around 175, 180, buy back those sold shares. So one should continue holding the stocks.
All right, Rajesh, coming to you, and this one is coming in from Divya, and Divya wants your view coming in for Polycaps, Solar Industry, and RHI Magnesita. She wants to know, out of these three counters, which one does it look good to invest for a period of 2 years? We know the Polycap right now is actually seeing a downtick on the back of news-based information, which the company has come out and denied on the exchanges. But nevertheless, after a sharp rise, the stock is seeing a sharp downtick as well. So out of the three that I mentioned, Polycap, Solar Industries, RHI Magnesita, RHI Magnesita, which one do you think makes sense to invest for a period of 2 years?
See, if I give the pecking order, Polycab would be the first choice because of their kind of products. They're into FMEG, that's fast moving electronic goods. The company has been doing well. It's just because of the news flow it has fallen, and by any chance it falls below 4900 and comes to around 48 or 100, it will be a good levels to buy. And the second one would be RHI Magnesita. That's on a very strong footing company doing very well. These two stocks can be bought for a medium to long term.
The next question that I have, Kunal, is from Rajiv from Mumbai, and he wants a long-term view on two counters, Sumitomo Chemicals as well as NMDC. Can he go ahead and invest at current levels in any of these names?
NMDC, yes, you can consider buying at current levels. Sumitomo Chemicals, the stock has been an underperformer. I think except for the last 1 week of strong chunk of volumes, the stock has been missing a lot of zing in terms of the price action and momentum which we typically look out for. It's not yet even broken past about the previous swing high of 450 approximately on closing basis, on the weekly closing basis. So a lot of resistances still to scale past about the stock price. The only encouraging sign so far is the volumes picking up for the stock. Eventually, if the volumes corroborate with the stock moving up higher, and if it breaks past above 450 levels, that could be a point where you may look to consider buying.
All right, this next one is coming in from one of our viewers, that is Mr. Murari Prasad. He's saying that he had purchased huge volumes of Reliance Power since 2017 at about 50 rupees, and he's suffering huge losses in that particular counter. He wants to know whether now he should look to accumulate some more to make some profits. Kunal, no doubt he's been patient enough to actually stay put with Reliance Power throughout the downturn that particular counter is seeing, and off late with the rest of the power pack, you saw also these penny stocks also see a jump. And given the fact that the Reliance Power stock now is off those lows that it has witnessed, you think it makes sense to average out, or should he just book out losses?
I think I would not suggest to average out the stock, of course. We typically tend to avoid buying such kind of names, even though at a point when the stock had fallen sharply from 300 levels to I think at point where the stock was single digits for itself. I also believe that possibly just because of the recent setup in terms of how the mid caps, small caps have shaped up, there could be a possibility that the stock may continue to ride up higher, but then it's the entire wave of small caps and mid caps. Once the wave gets into a correction, I think even stocks like R Power could get into a further leg of correction. So best to have a trailing stop loss, not to add, hold on to existing quantity.
All right, Rajesh, the next query is from Anjali from Chandigarh, and she's having Canfin Homes 100 shares from a price of 760 rupees. Can she add more at current levels, or should she move out of this one?
See, housing finance as a space is going to do well. We are witnessing a boom in realty sector. We have seen got DLF's project being sold out in 72 hours. That's a fact. And somebody looking to play the realty sector, housing finance is a very good sector. Canfin being one of those companies in this sector, I think one can continue to hold. If somebody looking to put fresh money, I think LIC Housing is on a better valuation parameter than Canfin Homes. So stay put with your Canfin Homes. For new buying, you can consider LIC Housing Finance.
All right, this one is coming from KN Bhatt, writing to us from Mangalore for you, Kunal. He has 133 stocks of Astral at a price of 890 rupees per share. Should he look to book profits or stay invested? And also, he wants to know if IEX is a good bet right now.
See, I think IEX we discussed earlier, and I was mentioning that it seems to be a stock which had been an underperformer, but it looks like that the stock is getting back into the line of a possible and a potential outperformance. So you can consider holding on to IEX or maybe buying even at current levels, and the stock would probably give those opportunities of dips time and again. So it could be a stock which you may consider. Astral, on the other hand, seems to be a bit of a weak chart. Now there are two aspects to the chart. The stock on the weekly basis has come back towards a major support. 1800 is a crucial support for Astral on the weekly time basis. But if the stock breaks below this level, then I would believe that it could start off a strong downtrend, which could maybe take the stock towards at least another 250, 300 point correction for the stock price. So if you're looking to buy, then I would suggest that just wait out for this phase to play out. In case if the stock holds on to this 1800 levels then and bounces off, then you can consider buying. If not, then I think look to buy back on dips closer to 1500 levels.
All right, so that's the day coming in on Astral. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
टिप चाहिए पैसा लगाना है
Queries and continuing the same, the next query, Rajesh, that I have is from Suresh Babu. He's a senior citizen and wants to know, can he go ahead and buy Glycols India at this point in time? Rajesh, this query is for you.
No, which company you said?
Glycols India. Glycols Limited, I beg your pardon.
Okay. I think one should avoid this kind of companies at this point of time when markets are on a high. It's better to stick to large cap names. And as far as the India Glycols has been is considered, it has also run up quite a lot on the ethanol story and all. It's time some correction might happen or it might go into some consolidation. A better level to add would be around 800 odd levels.
All right, this one is coming in from our viewer who's not mentioned basically his name, but he wants to purchase NCL Research. I don't think both of you tracked this particular account. I'm hearing it for the first time. I can see Kunal actually nodding his head. So let me give it a skip. A lot of our viewers have asked queries on infrastructure. Which infrastructure stock would look good? We've had like Kunal talk on IRB Infra. We've also had actually Rajesh talk on L&T in particular. So you can refer to those views when it comes to the infra space. This one is coming in from Sanjeev Sinha from Lucknow. Though he's asking this query to Kunal, I'll take this one to you, Rajesh. He wants to buy Tata Tech for the long term. He wants to know at what price should he look to buy this particular counter. What's your take on Tata Tech?
We are bullish on this stock. The company caters to not only automobile but aerospace and other things. Previously, it was dependent. Major part of the revenue used to come from Tata's, and now they have diversified to other customers also. The product profile has been diversifying. It's a huge prospective company. I think one can buy this on every tips. As far as at this point of time, I'm thinking 1100 would be a best level to enter. Look for long term, enter into the stock.
Right. The next query that I have, Kunal, is on MTAR Technologies. Omkar has bought these shares very near to the top of the stock that it touched recently at 2,800 rupees. At this point in time, should he go ahead and average this particular stock, sell, or continue to hold on?
Well, I remember, I think, for MTAR Tech, the stock had gone through a bit of a negative news flow, and that's why the stock had fallen from 2600, 2650 approximately towards 2400, 2200, and then from there 2200 the stock has gradually cooled off in the last, I think, 2-3 months or so. I would believe that the signs have so far not indicated indicative of any kind of a major bottom formation for the stock. So, we look out for price reversals, we look out for indicators oversold, as well as we look out for the tendency of volumes to pick up, arresting the stop price correction. So, I think we've not seen either of the three playing out for the stock, and I think that is one of the major reasons why I would still be on a wait and watch mode. I would not suggest an average at current levels, but then say over the next couple of weeks or over the next couple of months, if we happen to see those signs, only then look to average.
Okay, with that, let's kickstart with the rapid fire. Then Kunal, quickly coming to you. United Spirits average price 1100, Adani Total Gas average price 1063. Sivanshu wants to know what should he do with both of them.
Hold both of them.
The next query is on Infibeam Avenues. Rajesh, do you track this one? Ajay wants to know that is this a good stock idea to buy and invest at this point?
Avoid.
Okay, Manjunath S wants to know about Z Entertainment, 4,000 shares at a price of 200 rupees per share. He's saying a lot of gossip going around about this counter, but what should he do? Stay put with this or look to exit, Rajesh?
Go 50%.
Kunal, Gautam is holding a share, 1,000 shares of United Spirits from a price of 965 rupees. Good to hold on or move out?
Hold on.
Okay, this was coming in from Samir from Calicut. He has 200 shares of Bodil Chemicals purchased at 187 rupees per share. Kunal, should he stay put or look to exit?
Hold on.
Rajesh, what's your view on Reliance Infra? Prashant has bought these shares from a price of 230 rupees. What to do next?
Get out of this stock.
Okay, one of our viewers who's not mentioned name wants to know, can he look to invest in CDSL for the long term? Rajesh, what's your take?
Buy.
Kunal, Deepak is holding LIC Housing Finance from a price of 513 rupees. What will be your advice?
I think you should continue to hold on.
Okay, this one is coming from Sushil Kumar, who's bought Vedanta at the price of 330 rupees a year ago. What should he do with that particular counter? Rajesh, what's your take on Vedanta?
Hold on to the stock.
Rajesh, Balakrishnan wants to know, can he go ahead and enter Tata Technologies or Gandhar Refinery at current levels?
Tata Technology would be a better bet.
Okay, Anant Nayak wants to know that he wants to purchase 20 shares of a paint company. Should it be Asian Paint or Akzo Nobel, Kunal?
Asian Paints.
Okay, Rajesh Balaji bought Car Trade 100 shares from a price of 735 rupees. Good to hold on or book loss?
Book losses.
All right, and with that, we've actually come to an end of a rapid fire session as well as a query segment. Thank you so much, Kunal, as well as Rajesh, for actually taking queries for an entire hour on this edition of Buy Now, Sell Now. With that, viewers, we come to the end of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching. Stay tuned. Markets at noon coming up next.